The long call strategy position sizing, this is probably the most important part of the whole course, and I'd really implore you to pay attention here because people do get carried away with call options. Because call options are a lot cheaper than buying shares, people think that they can use their excess capital to buy more call options than they would shares, which is a big, big, big mistake. Please don't do it. You need to remember call options are time wasting assets. What does that mean? That means that between now and the expiry of a call option, the time value of the call option is eroding every single day. And that's a negative for you. Whereas with share prices only lose value as the share price falls. That means for you that you're more likely to hold value of your own shares than you do if you own call options that have time value in them. So that's really important to understand. So buying calls is less risky, however, than buying shares, but only when you keep your position sizing exactly the same. What do we mean by that? In other words, if your asset allocation to buy a stock only allows you to buy 100 shares, then you only buy one call option contract. That's really important to understand. It doesn't mean just because you've got more capital left over you could buy 5 call option contracts. That's not the right way to use call options to your advantage. So let's take an example with Apple. If you were to buy 100 shares of Apple, they're currently trading at about $100, that would cost you $10,000. That's a lot of money. But you might be able to come along and buy a 2-year call option for $10. And that will only cost you for one contract $1,000. So if you had $10,000 in your account, you might think you should go ahead and buy 10 call option contracts. That would be the wrong thing to do. You're overexposing yourself to Apple and you can lose your entire investment if the share price doesn't stay above the strike price that you picked. Whereas if you had bought the shares with your 10 grand, it's unlikely, although possible, for the shares of Apple to go to zero. So this is why we can't emphasize enough. Please keep your position sizing in line with the amount of shares that you were going to purchase if you were buying stock outright in your portfolio. That's really important to understand with position sizing on the long call strategy.